Good morning, good morning. How are you, everyone? Thanks for joining. It's 9:30 a.m. You know what that means? It means the New York Open. And the New York just opened. You can see it there, the change of background color on my charts. These three colors, by the way, this is the Asian range. This is a 30-minute chart of the NASDAQ. Asian range, London session, and then, of course, there is the New York just beginning. There's an overlap, of course, between London, Germany, Europe, and New York until 11 o'clock and 11:30 when Germany and London closes. That's New York time, of course. And now it's 9:30 a.m. We're watching this thing open. I typically don't do anything in the first 10 minutes at least of the open. I like to watch for the 10-minute candle to form and then use that as my opening range, my minimum opening range. The opening range could be significantly higher than that for me and for my style of trading. And if you watch my videos on YouTube, you'll see that playing out very consistently. Occasionally I will take a trade right on the open or right before the open even. That's even more rare for me. But on the open, depending on what the pre-market price action looks like. And today that certainly would not be the case. I'm not seeing any reason now to trade in this first 10-minute candle. This, of course, is a 30-minute candle, but the first 1/3 of that will be a 10-minute candle. If that makes any sense, and I'm sure it does. All right, what else are we looking at here? I also like to look over at this screen here. This is called the 430 screen, or what I call the 430. It's a 4-hour and a 30-minute, so 4-hour on the left and 30 minutes on the right. I will also sometimes look at what I call the four sisters here, this one, which will now become the three sisters because I take out the DAX during the New York Open, and I just focus on the NAS, SPY, and Dow. So the NASDAQ, the S&P 500 in the middle, and the Dow. I used to have the Dow in the middle. I've moved that over to the right now, just in case you're wondering, those who have been watching me for a while. These are all 1-minute charts. You can see the 1-minute open happening there. And I just have a little, it's basically a moving average, but it's an ATR red line there. Acts as a moving average for me. I just sometimes like to use that instead of the 20 EMA, but I like the 20 EMA too, which many of you have seen me use more often actually. Back to the main trading screen. This is the NASDAQ in a range. This is the S&P 500 also in this range. The Dow also in a range, looks very much like the S&P. There's the S&P, there's the Dow. Okay, DAX in a range looks very similar. The UK 100 or the FTSE looks a little different. I'm going to shift the zone up here now because we've made a new resistance zone up there on this 30-minute chart, and nothing here to see. And then, of course, gold that you like to watch very closely as well, especially lately. Been better or more action, more activity, more setups in gold than there have been in indices for me. Everybody's different, and we'll be watching that as well. In the meantime, guys, I'm going to take you back to the NASDAQ, and then I'm going to put you on pause. I don't want you to have to sit through this sideways grind here. I'm going to wait till we see something reasonable setting up, and then I'll bring you back, and we'll talk about what we're going to do. We may do nothing, but I'll explain to you why we're doing nothing, too, so you can get into the mindset of at least the way I do things. And I'm just one of, obviously millions of traders, and 1,001 ways to scalp and to day trade. One method. I'll be back, guys. Put you on pause now. Here we go. Pause. All right, guys, I'm back. And watching a little bit of action here. We are now 27 minutes into the session. It's 9:47. And what I've done is added a support zone right there. You see that there? So we hit this open area. This is the S&P, pardon me. I'm just going to put that back in there. And I'll add another one right here as price action develops. Just put you on mute there for a second. I needed to cough with all the dry air that's in here. We have snow on the ground here in the New York zone, and so the heating, of course, is blasting and causing some dry air. Kind of messes with the voice a little bit in the throat, but but we'll be okay. All right, so it's the S&P driving down now. This 15-minute candle, which I'm going to move over to the 10-minute, closes in 1 minute and 25 seconds. This is the S&P, right? I'm going to take you over to the NAS. I'm going to look at something similar. You'll see that we had a zone here on the 30-minute, pardon me. I'm just going to put that back again now where it belongs on the 30. We'll watch this one close in 11 minutes and 5 seconds. This is the 30-minute candle. Drop to the 10. Nothing for me here yet. Check the Dow. The Dow, the 30-minute. I'm going to drop a zone in here. So we've had a convincing break of this whole rangy section here. That's the entire London session so far. After the first couple of candles, you see the first candle was here. We had to drive up, and then for the rest of it until now, we're still, of course, in the London session and the New York session. The overlap is very important to remember because of the number of participants in this market right now. Tremendous force of buying and selling. The DAX, the FTSE, and then gold driving up. Interesting. Okay, hold everybody. Hold everything, everybody. As we look at the gold candles here, 15-minute closes in 10 minutes. 10-minute closes in. So we got to start a brand new one right now. I'm going to watch this for a second and see how many points we have available to us. Yeah, a little messy over here. Quite messy, as a matter of fact. Just going to show these with horizontal lines and remind my brain that there are things going on here that could be an issue in the near term here for gold. And this is likely to drive up. Likely to drive up right there. I'm just going to go over to my own platform here in case there's an opportunity that I want to take advantage of. Be the March contract. Pardon me, on gold will be the February contract. Slightly different than the indices here, and watching now closely. There it goes. Okay, and watch this for a second. See if we get a pull back in the bottom wick. Doesn't look like it. Sending out a note to my team. Just flicking through a couple of things now as we wait for this action. Just want to see if gold pulled back at all. There we go. Okay. That's what's called a fake out, right? For those who took the impulse right above, or even the impulse on this one, you may have got a couple of points, but if you're going for anything less than 10 pips, you wouldn't get it. If you're going anything more than 10 pips, I should say, there were only about 5 or 6 to play with there after your entry. Here's that bottom tail that I would normally look for here in this situation. And check the NASDAQ again, finding support now. And remember, this is the 30-minute support. See that there? This is where we're getting rejection from. Need a few minutes for closure. So I won't be even looking at those right now. I'm going to focus on gold here for a moment. Focusing on gold here for a moment. All right, guys. So the gold did press up, and the truth is, I was answering a question on Telegram, and so I didn't take it. But that was a legitimate entry right there. I don't fret over that at all. It's no big deal to me. There'll be another trade along here in a bit, and that was about 10 pips. And this thing still might drive higher, but you notice it drove right into these resistance areas here that I mentioned earlier that are so very important, even though they don't look that important to most traders. But you'll see it over and over again in my videos, how these reject and make life very miserable for traders who ignore them because they're just looking at this big zone up here, this big level, I should say, up here, right? I'm going to put you back on pause for now, guys, and then we'll come back and see what else sets up here, also in the indices. Be right back. All right, guys, I'm back here. You notice that gold just drove up. There was no entry for me outside of that initial entry here that I missed because I was talking to Telegram, and which I have no problem with, by the way. I prefer to help my group, quite frankly. There'll be another trade along. Is the big move happened, and now we'll likely drive it to the top of this zone, but we'll watch that. Maybe another entry on the way back down or even further up. And now I'm going to move over to the Dow. You'll see the Dow here, right here, pushing up. We're looking for a close now into this new zone. I'm going to show you the S&P as well. S&P it's got a bit more work to do, and then we have some issues here over to the left. This is the way it's been lately, by the way, and it's a function of the structure on the way down, of course, leaves some issues on the way back up very often, and that's just something we deal with, and we take fewer trades or we take different trades. So I'm going to revise these zones to account for that. There's still a nice 14.5 point area in here, which is relatively clean, not completely, but relatively. And then we'll go to the NASDAQ, of course. My preferred vehicle in this environment, due to the incrementally greater volatility. Okay, so until that candle closes, this is what I was just using this to illustrate to my Telegram group the nature of fake outs, and I might do a flash chat on that to explain why I would not take a short here and why I didn't. I mean, you were here on the video with me, and we talked about it. All right, put you on pause, and we'll come back when this candle closes. We might have a trade here. Let's see. All right, guys, we're back. Waiting for this candle to close, and it's flirting with closing above this zone here, but struggling to make it happen here in the last 39 seconds. We'll see if we can do it here. This is the US 30. Let's go over to the, okay, S&P. Yeah, no, it needs to be above this zone here. I'm just kind of thinking out loud here with you as we do this. And so this is, again, another challenging kind of open where it's, you know, it's promising to make a nice move, a strong move down, and then reverses and rejects very, very quickly. And now is at another resistance zone and rejecting again quite aggressively here. And it could still blow through, but it's not showing that kind of promise yet. So we will see. We'll keep our eyes on this, and we'll dance the dance the market brings us, right? And that's what we need to do here. If we try to start manufacturing trades because we want the action, that's when bad things happen, right? We're not here to do that. We're not here to trade. We're here to make money. And that sometimes means not trading, because not losing is the same as making money, right? Avoiding losses. In the long run, of course, if you don't trade, you're not making money that day or that session. But by not giving money back, it keeps the positives in your account, as opposed to driving down those positives or even turning them into negatives, which most traders do. I mean, the vast majority. And we don't want to be a part of that group, right? And if you're part of that group, the reason you're here, hopefully, is to learn to do things differently, to do things more resourcefully, and to do things better. All right? Put you back on pause, and we'll see what we can do here. Be right back. So, guys, I'm bringing you back here again. See that, see this is driving up, right? We didn't have a proper signal. Remember, it wasn't closing inside of this zone here in the S&P or in the NASDAQ for that matter. It failed to. And then all of a sudden, we've driven up here. And that's fine. So it makes you feel like, oh my goodness, I'm missing the move. And many traders will feel that way and then jump in here to catch this with the feeling that this thing just might go all the way up here. And it might. That might be the kind of day that we're in for. But it doesn't matter to me. If I don't have proper optimal entry setups, there is no trade. There is only movement. And seeing this thing go fairly strongly after the fact, after the non-entry, is completely irrelevant to me. All right, back on pause. And guys, we're back again. You'll see a few more minutes have passed here. We have 55 seconds left in this 10-minute candle, and you will see that there's still nothing going here for me, right? Even if this candle closed now into this zone, there is no room for me to take a trade that would give me any kind of confidence whatsoever. You can see right here we have this rejection here. It's a minor rejection, but it's an important one. So there's nothing here for me. This thing would have to close up here convincingly in this zone, and then I would consider something, but then still be very mindful of other stuff that's happening up here. So that's the NASDAQ. Let's go over to the S&P. Same thing. Now this candle looks like it might close in the next, 20 seconds, close up here, but look what we got happening over here. We would need a blast through of all of this noise to get up to this nice clean area before I would consider taking a trade. So just to make that visually clear, what I'm going to do is put a zone here so you can see that that's an actual zone that I would need to see. This is again for my style, right? To see penetrated and closed in and broken and closed above. Struggling with the English language here, guys, a little bit, but we'll get through it. English as my first language, by the way. All right, Dow, not much happening here. We just got a new candle beginning, but there is quite a bit of noise here again to the left. And so I'm just sitting this out, guys, until I see something really convincing. And something convincing could still happen in here, but I would need some other structure. This is a very, very extended move now. If you go back to my avoiding a fake out checklist, one of the things is the current move overextended or overly extended? And the answer is yes on this one, right? Because this leg, this impulse wave, is significantly longer than all the other ones in this session, even this one here, right? This one's pretty close, but you get the idea. So on a relative basis. And then DAX, nothing. FTSE, nothing. We're at resistance here. And then again, a lot of noise. Well, but bit of noise over here to the left. I don't trade the FTSE anyway, but I wanted to show it to you. And then gold. Let's go back to gold. And gold's got some extension going on here too, right? We talked about it a little bit already, so I'm not going to beat a dead horse here on gold, but get the idea. How about GJ? A lot of people like to trade GJ. Nothing. This is just a rangy mess for me. Same thing with EU. There are no trade opportunities here for me this morning. That might change in 30 minutes. It might change in an hour. It might not change at all today. So guys, I'm going to end the stream. But I think this has been a valuable lesson of walking through all the different indices and the various pairs and gold and what have you, and seeing why and how to think about taking trades and saying no to it in many cases. And this is one of those cases. Have an amazing day, guys. I will talk to you soon, hopefully later today, but maybe even tomorrow. Take care now. Bye-bye.